Hi, I'm Alan Henderson, Director at Erskine Owen, and we're really excited to be bringing to you our healthcare properties fund with a forecast yield of 5.75% and our seed property or the initial property being the Havelock North and Hawke's Bay Medical Centre. Today I'd like to take you through the background on the property itself and giving you the detail of what it is, where it is and how it all works. I'll also take you through some of the critical finance information. Then I'll talk about some of the frequently asked questions that we get, and finally how to invest. Let's kick off with the property itself. We have purchased the property at 33 to 35 Napier Road, Havelock North, for 6.6 million. We've had the market valuation come in at 7 million. In my opinion, I think we've bought really well because we've got 400k of equity in there. The land area is 2,044 square metres. And the floor area is 1,575 square metres. We've got annual rent there of 361k, and there are market rent reviews. The WALT, the weighted average lease term, is 6.21 years. What that means is that there are a number of tenancies, and we take the weighted average lease term to come up with that 6.21 years, but noting that the medical centre has a much longer lease than 6 years. And the medical centre, as we'll see, is the anchor tenant. Talking about the key features of the building itself, it's an L-shaped building and it's split over 2 levels, and multiple health services being operated from the property. There's really great, in my opinion, accommodation in terms of a variety of consulting rooms, offices, procedure rooms, amenities, waiting areas, and a pharmacy. The medical practice is the anchor tenant, largest tenant, but also businesses like pharmacies and audiology businesses and physios effectively feed off the medical practice because they will get referrals from the practice. And so those types of businesses like to be in a medical centre where they can get that foot traffic or that referral traffic. What about the location itself? You might note that we have already bought a number of properties in the Hawke's Bay area, and we've done that because we've specifically targeted the Hawke's Bay. We really like the Hawke's Bay because of its economic growth potential. Our research tells us there are millions of apple trees being planted and planned to be planted, which means growth in agriculture, growth in the number of jobs, growth in housing requirements, and of course, as the population grows, then so does the need for medical services. We've got the Napier Port there, and we've also got the lifestyle, the climate, we've got wineries, and so it's an area that we're continuing to see growth there in terms of population. We hear reports anecdotally of there being a shortage of rental property because of that growth. That tells us that anecdotally the population is growing. Havelock North itself is a high socio-economic town, and with a higher proportion of older residents, which means goes towards health needs as well. So there's a lot of things that we like about Havelock North and the wider Hawke's Bay region. Talking about the equity requirements and the funding requirements of this initial property. So the total funds required are 7.15 million. 3.3 of that we are raising from the BNZ. The balance of 3.85 million is to be raised from investors. This is on a 50% loan to purchase ratio, really. They will lend up to 50% of the purchase price, so the LVR is technically a little better than 50% or a little lower than 50%. You can see the interest rate there on screen, and probably more importantly is what about interest rate protection. So we've taken out a swap to secure a interest rate of 4.25% for the period 1 April 23 to 31/3/24. And it's an interest-only loan with no principal payments required. So we've got some certainty there around interest outgoings, which is really important in this environment, and we'll talk about interest rate forecasts later on. To run you through the profit and loss for the year to 31 March 24, we've got forecast rental 380k being 361k known, and then 19k of expected rent increases. Obviously in this environment, one would be fairly confident of that with the inflation that's going on. The interest there of 140k, corporate management fee, valuation, accounting, audit, administration. So total costs of 159k. And there with a net profit of 221, so that against the equity gives us a 5.75% return. Let's just talk about some of the frequently asked questions. How will a rise in interest rates impact the syndicate? We've got a fixed rate there, which is supported by a swap. And feel free, of course, to drill into what that means with when you're talking to us about the opportunity. But essentially, our understanding, we are researching interest rate forecasts all the time, and what we're seeing from banks coming through is that interest rates may well peak towards the end of next year. Who knows? We're not crystal ball gazers. We don't pretend to have certainty about what will happen. Our job is to manage that risk. We do that in the form of swaps. One of the other things that we look at is the natural hedge that rent inflation will give us. It's not obviously a direct hedge or a perfect hedge, and won't necessarily have the same time, and any rent increases are not necessarily going to offset interest rate rises either. But over time, our belief is that the rent increases will be keeping pace with interest rate rises. I could be completely wrong because we don't know exactly what interest rates will do. But why I say that is that rate rises to a degree are being driven by inflation. So the Reserve Bank lifts the OCR to try and peg back inflation, or the rate at which inflation is going up, and that in part is a driver of the interest rate rise. It's not the only driver, because the cost of money for banks comes from not just the OCR but other sources as well. So we're conscious of that. And so when we're looking at forecasts, we're saying, well, how long will the likes of the Reserve Bank continue to drive up the OCR to fight inflation? We're in a challenging, for some industries, a challenging economic environment, which may ultimately, and also if we think about consumers having to weather ongoing interest rate rises, there will come a point, in our opinion, where the Reserve Bank will say, well, if we push too much harder on interest rates, we may really impact the ability of consumers to keep supporting the economy in the sense of spending. So there is a tension there, and I wouldn't want to be the Reserve Bank governor, but we've been through a few cycles, and ultimately there's a point where interest rates, in our opinion, have to tap out in terms of rises. Again, I'd really encourage you to talk to us about that. It's not a perfect world, and we don't for a minute pretend that this is a guaranteed return. Of course, with anything, there is risk involved, and we do encourage you to give that careful consideration. The offer is 100% underwritten. What does that mean? It means that if we get to the settlement date and we haven't raised the required equity, then our underwriters will step in and provide that money, and our underwriters have been with us for some time. We're very confident about that. Will the syndicate add new properties? That is the plan. They'll be added as and when we can find properties that allow us to keep delivering the 5.75% and quality properties. They've got good tenants, and so it's not just about the yield, in our opinion. We also want to be delivering quality. How liquid is an investment in the syndicate? Let me describe our process to you. So the first, if you came to us wanting to sell, the first thing that we'd do is offer it to the existing investors in the fund. If there are no takers, then we go to our wider pool of investors, and then beyond that, we go to our whole database of about 10,000 people. Our experience to date is, well, firstly, we don't have a lot of people selling because they like the returns that they're getting. Secondly, when people do sell for life reasons, whether it's them choosing to buy a holiday property or whatever that may be, we find that there's been really quick uptake from the database, and I don't believe that we've ever had to go beyond the syndicating the investors that are investing in our syndication offerings. So most of the time it just happens within the fund or the syndicate itself. Is the monthly payout consistent? What factors will affect the distributed amount? Obviously, the risks any investor need to consider are the tenant risk, so the risk that a tenant falls over and therefore we have a vacancy, and then that could compromise the revenue, and then we've got to re-tenant that property and pick the rent back up again. And so there's the potential for that to happen, as there is with any commercial property. We, of course, make sure where possible pursue personal guarantees, and that's important as well. So that is a risk. What I like about this property is, because of the nature of the industry, we've got professionals in there, doctors. Doctors are always busy, so that gives us some confidence. What about the cost side of things? Well, the biggest cost is interest rates, and we've already talked about that. So rise in interest rates, if it gets to a point where they rise really significantly, that could affect the return. But obviously we've talked about hedging and the natural hedge that rent rises can provide as well. So how to invest? Well, step one is you simply apply for the units. You can do that online with Syndex, or else you just fill out an application form which we can provide you, and our great team will help you through that process. And also some AML that would need to be done, which you'll be familiar with. We then review that application and then convey acceptance to you, and then there'll be the required transfer of funds by the due date. And then on settlement, we issue you a partner certificate confirming your investment has in fact been issued. Thank you very much. Look, we'd love to talk with you, and I really encourage you to pick up the phone and talk to us, or send us an email through, and we can get on the phone and chat this through with you and answer any other questions you may have. So on behalf of the team, I'd like to thank you and look forward to hearing from you.